Hello, and welcome back to another week of the KBCR TV show. Hi, everyone. Thank you for watching. We are so excited to have you here today, and we are going to get into the topic today of the new updates around the credit industry. What's going on in the new industry of credit? But before we get into that, let me make sure that you are subscribed to the Kingdom Builders Credit Repair YouTube channel that is powered by the CTR Media Network. Hey, come on and subscribe. Get your link today so that you can have your notifications set every time we go live, every time that we have some new updates every Friday from 12:30 to 1. Pertaining to credit and finances. Hello. Oh, we are so excited that you are here today because we got some news for you. Today, there are 3 topics that we're going to talk about, and they are medical bills. It is also pertaining to housing, as well as some new credit score updates. So let's get into today's information. First off, we want to make sure that everyone understands that credit is something that you need in exchange for the things that you don't have the money right now to pay for. So what is credit? The ability to be able to go to a bank or a credit union of any kind, a lender that is willing to give you the money in exchange for a large amount of money for a smaller amount of money for a temporary period of time. They can also lend you a line of credit. So the only 2 things that will ever appear on your credit is going to be a loan or a card of some kind. So I just always want to emphasize that every time we come on, because we want to make sure that you understand what credit actually is and why it is so important for every person in the face of this earth. Okay? All right. So now let's get into what is new in the credit industry. What is new in the credit industry? Number 1 is the significance around the medical bills that appear on our credit. How many of us have gone to the doctor and our insurance didn't cover the whole bill and we were stuck with thousands upon thousands of dollars or even hundreds of dollars? And eventually what happens is the medical debt does not actually break down the monthly payments or send you a bill per se all the time in the mail when you have a medical debt that you have to pay. So what tends to happen a lot that we see in the credit industry is that the medical debt will show up on your credit report after it has exceeded 180 days of being late without you even knowing that you even owed a medical debt. And once it appears on your credit, it's actually going to be in collections. So we want to make sure that we understand that, first of all, medical debt sometimes are very insufficient in supplying us the actual bills that we owe from every department of when we went to take care of our health. So if you're going to the medical doctor, if you're going to the emergency room and you decide to walk in that lobby, you're going to triage, they're going to take your blood pressure, get your height and weight and all that good stuff. Those are 2 different departments from the place that you would receive a bill for the doctor actually seeing you, and then a separate bill for diagnosis. So we just want to understand that that is the medical bill industry and how it works. It's not always that we get the bill. But here's the big news around the new thing in the credit industry. The Consumer Financial Protection Bureau. They are known as the CFPB, the people that protect the consumers in the credit industry, have ruled that there is going to be the forgiveness, or in other words, not really the forgiveness. Let me say it like this. They have ruled that there is going to be a wipe away from your credit report of medical debt. Okay, so we were supposed to have that ruling established on June the 5th of 2025. And here we are now with new information that they are actually going to go forward with the medical debt being removed from our files. Can you say hallelujah? Okay. I'm trying to tell you that is the best thing since sliced bread. That is the best thing that could happen to many of us, because all of us in some way or another have had some type of medical bill, vision, dental bill hit our credit reports, and those are all interrelated. So therefore, if it is on your credit report and it's something that needs to be removed, now the CFPB is saying that they are ruling that that medical debt is legally going to be removed at some point. Now, it was supposed to be taken off of our reports as of June the 5th of 2025, but they haven't actually completed the ruling date. So they moved it a little bit out to July the 28th of 2025. So those are the days that is the day that we are looking at to have the medical debt removed from our credit from 2025 year of any type of medical expenses. Can y'all celebrate that right there? I'm trying to tell you. Now, this has been something in the works for quite some time, especially since we've been in the credit industry. You know, we've heard over and over again that they were trying to pass laws to make sure that the medical debt was removed. But here we are now in 2025, and it looks like we are going to get our answer to getting that medical debt taken off of our credit. So I'm so happy about it, because I see this all the time. Every credit report that we have gone through, just about everybody has medical expenses. So that is a big significance. And what it means for you, if you have medical debt on your credit report and you're able to come into KBCR and get it deleted, it also means that now if it is disputed, that it would be removed, and you would gain about 25 to maybe even 50 points, depending on what other items are on your credit report. That is a big jump for a lot of people. And many of us, sometimes we just need that extra 25 points. We need that extra point so that we can make a purchase of a house, right? So that's over $49 billion that will be taken off of the consumer's credit report in today's society. I'm talking about that's a big deal. You hear me? All right. The next thing that we're looking at is the ability to be able to buy a house, and where are they going to be pulling the credit scores from? Well, news update, the new industry in the credit world is, the new credit industry update has been announcing that they are now going to start using some of the other models of credit scoring in order for the lenders, the creditors, to be able to run your credit for a mortgage. Now, for some of us, that's going to mean that is a big plus, but for others of us, it may mean that it's not so great of a deal. What do I mean? So the update is that originally we were having to go through only my FICO traditional system of housing. So if you look at the MyFICO, which is the real credit reporting agency who created the original credit scores of Equifax, Experian, and TransUnion, what they did is analyze the reports, because those are the credit bureaus, Equifax, Experian, TransUnion, and also Innovis. They used to check them too, but they're not a major credit bureau. So you got the credit reports on one side, then you have the credit monitoring company, which created the scores for the reports, and that is MyFICO. So MyFICO has announced that they have some new scores coming out, and I'm going to talk about that in a second. But as it pertains to housing, previously housing would only be ran as a credit check for the FICO 5, the FICO 4, and the FICO 2 monitoring services. So when I say my FICO, what you have to understand is that my FICO has several different models of numbers that pertain to what kind of credit you have. So it's not like you just get one credit score per credit bureau for everything that's on your credit. Everything is broken down into the type of credit that you have. So if you have the FICO score housing model, then normally they would run it through FICO 5, 4, and 2. But what is happening, the new update is that now they will be using the FICO 10 and the Vantage scores, which were created by the credit bureaus to kind of offset, the general system of my FICO altogether. So that is a big plus, because the bureaus, when the credit bureaus, Equifax, Experian, and TransUnion decided to come together and begin doing their own system of scoring outside of my FICO, then those scores range differently. So they range from 0 to 900. So you could have a much higher credit score on the Vantage scoring system model than you would on the MyFICO model. So it really is going to be a big advantage for many consumers to be able to purchase a home, because now your scores are not just going through the MyFICO 5, 4, and 2 model. And because of that, it means that they can look at maybe possibly your Vantage scores are better, and possibly also, instead of using the 5, 4, and 2 models, the number 10T is actually going to be possibly a better opportunity for you to be able to get approved for your home. So that is something that is so big in the industry of credit. Everyone wants to buy a home. It's the American dream, right? So not just buying a home, but being able to sell a home and get another home, being able to have your own house, that is a big deal in the world. Everybody needs to have some kind of shelter, but what beauty it is to be able to buy a house that you really love, and especially a dream house, okay? That's what we want you to do. But in order for that to happen, you gotta be able to have the right scoring system that's gonna score you correctly, that's gonna show your best efforts with your credit and finances. So what is that going to do for you? That, for many of us, is going to help us to be positioned with a much higher credit score. It's going to allow us now to be able to go and apply for a house, and we're not just solely dependent on that traditional MyFICO credit score with the models 5, 4, and 2. So that is the new update that is changing in the credit industry. All right, and the third thing that's changing in the credit industry, you may not really understand what the new scoring models are. So when we talk about scores, we have to, like I said before, understand that MyFICO, originally Fair Isaacs Corporation, created the FICO scores. And those are the scores that 95% of lenders and creditors are going to run your Social Security number through in order for you to get approved for credit, right? So when it comes to the new update, there is a new model, which I just named, the FICO 10T, and there is a new model even in the Vantage scoring system that was created by Equifax, Experian, and TransUnion, where they are actually going to upgrade to the VantageScore 4.0. So we have two new models that are coming out for scoring, and one is on the FICO side, the other one is on the Vantage scoring side. So first, I want us to just comprehend that the FICO score is usually the one that most lenders are going to run your credit check through. But now what's happening is, since the credit bureaus have now established that they want to provide a score that is similar to FICO, but not exactly created on the same formula of FICO. So what is happening is now that Vantage scoring system that's over here that the bureaus created, now we are able to include the Vantage scores with some of the lenders. Now, it's not a lot of lenders that are going to get on board with that, so I don't want us to get too happy. But the fact that we have two new models of the FICO and the Vantage system, that is something that we really need to know how these new systems work. So first, I want to go over the FICO 10T. So the FICO 10T, the T in the FICO 10 means or stands for trending data. When we talk about trending data, we're talking about how it looks for you to manage your credit overall. Most of the time when people had a credit check done, it was going to be where the credit check was done immediately. They took a glimpse at what exactly was on your credit, and they really didn't pay attention to like long-term, over a period of time of how well you manage your credit. They didn't look at like every single month that you were paying your bills down. They didn't look at your balances. They didn't look at what your monthly payment was before. It was just a quick snippet of what was the score and okay, what type of accounts were on your credit report. But now with the new FICO 10T and also with the Vantage 4.0, Vantage Score 4.0, they are now looking at the trending data. So again, the trending data is going to help us to see how well you pay down your debt. It's going to help us to also see what are your total balances that you owe. Are you in a lot of debt? Are you actually paying down your debt and being able to make a difference in your debt by paying it off or paying it down? And then they're looking at, what is your monthly payment? And are you just always making the minimum monthly payment, or are you actually making more than the monthly payment? Are you paying once a month, or are you paying multiple times a month? That's something that KBCR has always taught their clients. Our clients know that they are not supposed to be just paying their debts only one time a month and their utilities. As a matter of fact, we want to make sure that you are paying multiple times a month. Why? Because you would also pay your debt down and lower your interest rates. Okay, so the 10T stands for trending data. So what is the data that the lenders and creditors are collecting now in order for them to see how well you are doing with your credit and your finances? So we got to understand, y'all, that the whole new era of the credit industry is moving towards getting you out of debt instead of accruing so much debt that you really will never be in position to pay it off. That's why if you look at any of the previous videos where we talked about the actual debt and how to pay it down, then you would know that you have hope, but you have to put together a plan. And that's what Kingdom Builders Credit Repair is here to help you to do. Okay, so that is the thing about the 10T. It stands for trending data, and it literally means that you have a better opportunity to manage your debt. So we look at the bottom line of the 10T is understanding that we don't want to have a lot of inconsistencies with having high balances and then having low balances. Or in other words, you know how when we have a credit card, we go into the arena of, I'm gonna charge my card up now and then I'm gonna pay it down later. And we get sometimes stuck in the middle where we can't really pay it down like we had intended to pay it down because maybe some type of emergency or something happened in our life to show us that, okay, well, we don't really have the money to put aside for this card because we got something that is an emergency expense that we talked about in the previous videos. Go back and watch that. Okay. So we want to make sure that we understand that this FICO T is going to be monitoring your consistency of maintaining your balances and paying your monthly payment, really paying above your monthly payment. So they want to see a steady pace of paying your debt down. They don't want to see where you're constantly, okay, 1 month you're going to charge up the card, you're going to add a whole lot of debt to it, maybe even max it out. And then the next month you're going to pay a little bit on it, but then you're going to go back in the following month and you're going to charge it back up again. They also don't want to see the fact of you not really being able to maintain your monthly payment. So you got to be able to have the consistency with this new FICO 10T system that is going to be tracking additional information about how you're doing with your credit and your utilities. We don't want the roller coaster ride. We want the ability to be able to consistently show that we can handle our money. The whole goal of every lender that's lending out money, every creditor that gives you credit, gives you some type of line of credit, whether it's a credit card or a department store card or a personal loan, a vehicle loan, a mortgage loan, a student loan, whatever it is, a furniture loan, they want to make sure that you are thinking about paying off the debt eventually. They don't want to see that you are inconsistently not making enough money or whatever the reason that may occur where you cannot pay your debt. They want to see that you are going to make your promise and keep it, that you're going to do whatever you can to make sure that you get your debt paid down and paid off eventually. If it's a loan and if it's a credit card, they want to see you maintain those balances very low. I'm talking like between 5 to 15% low. So multiply 0.30 times your credit limit in order to figure out what your balance needs to stay under with your cards, and also pay consistently on your debt so you can lower the payment. So we want to make sure that people understand everywhere that the new changes in the credit industry are going to be tracking more details about how you manage your money. So we got to stop and think about what are our necessities, what are the things that we got to take care of. But that in a nutshell is going to cover the FICO 10T new scoring system. Now, the other scoring system, which is the VantageScore 4.0, is the latest version of the Equifax, Experian, and TransUnion credit reports coming together to create their own formula of how to score you on your credit based on the credit limit. Now, the thing about the new Vantage scoring system is that they are looking at those people who have the consumers that have the thin or the limited credit lines. The thin or limited credit lines literally mean that if you have a credit card and you don't have over $1,000 of a credit limit, they're going to be focusing on you in particular. If you have a thin credit line or a thin credit report, they're going to be focusing on whether or not you have a couple of items on your credit. If you have less than 5 items on your credit, in between 5 to 8 accounts on your credit altogether, and let's say that out of the 8 or out of the 5, 4 of those accounts are paid off and closed. That means that you don't really have any activity on your credit at all, because what credit looks at, what the creditors look at, is the open active account. So where is your activity on your credit? Where is the activity to show that you have an open active account that you're paying on, that shows how well you are managing your credit? So we don't want a thin credit report. We don't want a thin credit score, okay, either. We want the plump credit score, the one that's going to get us into the excellent range of credit. And in order to do that, that means that those of us who have very minimal amount of accounts on our credit report need to begin to add more items. Well, if you don't know where to go to get the right type of credit lines added to your credit report, that's something that we do here. Come on over to Kingdom Builders Credit Repair. Make sure you get signed up today, and we will handle that for you. It's all included in our 12-month program. Okay, so you'll be able to get the right kind of credit established, and you will be sitting pretty with your FICO scores being over a 720 and your Vantage scores being over an 800. Okay, that's what we want the scores to be at in order for us to have excellent credit scores on the FICO side as well as the Vantage side. Okay, and then when we're looking at also the thing that they're looking at on the Vantage side is they're looking at any late payments. They're going to emphasize more points being deducted from your credit score. With the Vantage scoring system, with the new 4.0 system, they are going to take away even more points for people who have late payments. Now, we already established that the late payments calculate around 50 points every 30 days when you don't pay your bills on time, when you don't pay your debts on time. So every time you are late, then you're losing approximately 50 points from the FICO score end. But the Vantage score end now is saying with the new 4.0 system, you're going to probably be losing anywhere between 50 to 100 points from your credit score every 30 days. Now that is a big drop, okay? That is a huge, significant drop in your credit score just for having a late payment. They are also going to be monitoring the rental, utilities, the telecom payments. They can be included in the new Vantage scoring system of 4.0, but this is not something that I told y'all before. Utilities are not supposed to be on your credit. Well, what is a utility? Our rent, our lights, our water, our cable, our insurance. They don't want that on your credit, right? So if they don't want that on your credit and you do add a telecom account, and a telecom account is an account that's listed as a utility on your credit, and if you add your rent to your credit, if you're adding some type of insurance or cell phone bill to your credit, then those are going to now be counted as a part of the Vantage score. But you do need to understand, lenders don't want that type of credit on your credit report. That's what we call at KBCR fake credit. So we want to stay away from the fake credit. We want to establish that this is not necessarily something that we want to start adding to our credit because the lenders and creditors don't really trust the alternative supplemental type of credit lines when it is a utility being added to your file. Even though the new the new Vantage score 4.0 is accepting the utilities at this point. That is the new update. And like I said before, they also are looking at making sure that if there is a medical debt on your credit, now what they are saying with the Vantage scoring system, as well as with the FICO system, that they are now going to ignore the medical debt on your credit. But in order to get it removed, you do have to implement a dispute investigation so that it can be taken off of your files. And again, that is what we do here at Kingdom Builders Credit Repair. So make sure that you get signed up. The link is below. The information is running across the screen for you to go to our website, get in contact with us, and we will be just ecstatic to help you to get to that next stage with your credit. All right, time's up. That's all we have for today. I hope that you have learned something from us. Let us know what you learned today by making a comment below. Make a comment and let us know what this is doing for your life, for your credit, for your finances, so that we can continue to teach you all the wonderful things we know about credit and finances every single week from 12:30 to 1 here on the KBCR TV show powered by CTR Media. All right, until next time, y'all take care. Bye-bye.